My fellow Americans, this is Liberation Day. We are finally putting America first. Starting tomorrow, the United States will implement reciprocal tariffs on other nations. We will establish a minimum baseline tariff of 10%. China, 67%. That's tariffs charged to the USA. We're going to be charging a discounted reciprocal tariff of 34%. You think of European Union, very friendly. They rip us off. 39%. We're going to charge them 20%. These tariffs are going to give us growth like you haven't seen before, and it'll be something very special.
Good morning. You're with us here this Thursday morning on a fresh new edition of Bazaar Morning Call. Well, Trump has neither been nice nor has he been kind in that sense as he promised he would be. And he's imposed tariffs which are much higher than the worst case that many in the market were expecting. So read across the globe, it's a big day. And we'll track, of course, everything that you need to know through the course in the run-up to the market open and, of course, beyond that as well. Lots of industry-specific discussions and, of course, the market very much in focus as well. I'm Prashant. With me, my colleagues Surabhi and Nigel. Guys, hi, morning.
Hi, morning, folks. And I was just thinking, Prashant, and you'll remember this. I think in our careers, this becomes the third biggest seminal moment, which is sort of global in nature. The first was the global financial crisis that we reported on. The second, obviously, was COVID. And now this, Donald Trump trying to reorient the world, shift its axis, get manufacturing back to the US. Whether it'll work or not, we'll find out.
I feel a few years younger now. Thanks for that, Surabhi. But, I think the hope was that the bite is not going to be as bad as the bark. It didn't play out that way. It appears President Trump means business, at least of what we heard as of now.
I mean, it's just, I know that picture of him holding that placard, right? I mean, it's just incredible. Scenes that we've not seen before. I mean, the president of the US standing there, we're going to charge this, we're going to charge this. It's
and that was his pitch as well, right? That in a couple of years from now, you all will figure that I was right. And this is about making America great again and, the golden age and wealthy again and all of that. So.
Well, let's drill it down in terms of how we are stacked up, right? We'll look at the market first, and I'll give you a quick sense. It's about a 1% cut on the GIFT Nifty as we begin this morning. US futures are down sharply. Asia is down as well. And the graphics will come up on your screen. So about a 250-odd point cut on the GIFT Nifty is what we are showing at this stage. I mean, the point is yesterday the market went up 160 points. So that's got to reverse. That's got to go. And then there'll be some more pressure. So 250 to start with, maybe higher as we go along, because the rest of the world is, of course, much under pressure by a lot more. Now, more sort of global market indicators in a bit from now, but let me just get straight to the sort of tariff news. So Trump's reciprocal tariffs, neither nice nor kind. And I'm just taking off from what he himself said, well, they'll be nice and kind, but neither of those two, much harsher than expected. And as I began by saying, and we were kind of sort of phrasing this in a clear way, right? Will this be a risk shock for markets or a clearing event? And I think it's pretty clear what it is. It's a risk shock. And those who were expecting this to be a risk shock, what has actually been delivered is actually worse than that. Those expectations as well. I mean, Goldman Sachs, for example, were saying that they expect tariffs. Now, they revised it higher. But even after that revision, they expected tariffs to rise by about 15% or so. It's risen more than that. Now, just a quick run through. China has been assigned a tariff of a total of 54%, EU 20%, India 26%. And, of course, there's a whole list of countries, and we'll get to that in a bit from now. The thing is, tariffs are being levied based on an estimate. At least that's what they're claiming. This is an estimate of both the tariff that other countries are charging the US and their estimate of non-tariff barriers. Things like VAT. Is the currency of that country being artificially suppressed so as to help exports? So, I mean, that is essentially what is going into their calculation of what the reciprocal tariffs are going to be. And, of course, they're taking half of it. And that's what they're saying. It's a discounted rate in that sense. Now, the thing is, the hope is really that Trump is and this is globally the case, and they've also said it, The White House, I think, has issued a statement that these tariffs will remain in force as long as President Trump sees them fit. And based on negotiations, etc., they can be brought lower. So that's the hope. The problem is, since these reciprocal tariffs are based on tariff and their estimate of non-tariff barriers, say, for example, a country like India, if we lower our tariff rate by, say, X%, how much will that translate in helping the U.S. tariff to be brought lower? Because it's not just the tariff rate, it is these non-tariff barriers which go into that calculation as well. And I think, that is something that we need to watch out for. We'll discuss with guests as we go along. Just a quick bit, effective U.S. tariffs now rise to close to 25%. When Trump took office, it was about 2.5%. JP Morgan says this basically translates, these hikes basically translate into a tax hike for the U.S. of about $660 billion, which is about 2.2% of GDP. I mean, that number is enough to wipe out and throw and push U.S. into a recession by itself. And of course, JP Morgan has also got something to do about the world. They say that large tariff shock threatens U.S. and a global recession as well. Now, just a quick bit on India. Indian exports to U.S., and these are just rough and dirty calculations. I just looked at the India exports to U.S. They were $91 billion. A 26% tariff translates to about $24 billion as a percentage of GDP. Our GDP is about 0.6% of GDP. But of course, I mean, it will not be that. It will be most likely lower because it's not obviously, I mean, there is exemptions right now. And of course, all of it is not going to be borne by Indian manufacturers. Pharma specifically finds a mention. A lot of commentary around how pharma could see a relief rally. The sector has been exempted. But I must say for now, because the executive order clearly states that some sectors on which tariffs have already been imposed and sectors on which tariffs are yet to come under the national security section. I mean, so they've been talking about onshoring and getting manufacturing to the U.S. So these sector level tariffs may come later. So be mindful of that. Just to tie in the levels, we start sharply lower. For the Nifty, we get to the first big support zone, which is 22. I mean, it comes in at 22,867, which is the 20-day moving average, and then 22,692, which is the 61.8% retracement of the bounce that we've seen from the 3rd of March low. And similarly for the Nifty Bank, the 20-day is 49,534, and then the 61.8% retracement is 49,368. So a red day, and I'm assuming not very many places to hide. Maybe pharma is one for now to begin with, but one needs to be mindful. The tone, the tenor, what they want to do is very aggressive. So will they really, after talking about pharma for a long time, will it be completely exempt for all time to come, or will we have to deal with it later? That's the question. Surabhi.
Absolutely. Well, actually, Prashant, before I get to how some of the Asian markets are reacting, and there's a statement out of China already. They're saying we will take resolute countermeasures, against the imposition of these very stiff tariffs from the U.S. So more on this in just a bit. But let's actually listen in to some of the excerpts that came in from last night's address. Donald Trump announcing this new Liberation Day.
My fellow Americans, this is Liberation Day. Waiting for a long time. April 2nd, 2025 will forever be remembered as the day American industry was reborn, the day America's destiny was reclaimed, and the day that we began to make America wealthy again. We're going to make it wealthy, good and wealthy. For these reasons, starting tomorrow, the United States will implement reciprocal tariffs on other nations. It's been a long time since we even thought of that. We used to think about it a lot. We didn't think about it for many decades, and you see what's happened. For nations that treat us badly, we will calculate the combined rate of all their tariffs, non-monetary barriers, and other forms of cheating. And because we are being very kind, we're kind people, very kind. But we will charge them approximately half of what they are and have been charging us. So the tariffs will be not a full reciprocal. I could have done that, yes, but it would have been tough for a lot of countries who didn't want to do that. Not a full reciprocal. I could have done that, yes, but it would have been tough for a lot of countries who didn't want to do that. So if you look at that, China, first row, China, 67%. That's tariffs charged to the USA, including currency manipulation and trade barriers. And so we're going to be charging a discounted reciprocal tariff of 34%. I think, in other words, they charge us, we charge them less. So how can anybody be upset? They will be, because we never charge anybody anything. But now we're going to charge. You know, you think of European Union, very friendly. They rip us off. It's so sad to see. It's so pathetic. 39%, we're going to charge them 20%. So we're charging them essentially half.
Hey, what do you say? It was political theater, but it's economic reality as well, not just theater as well. Now let's see how this reality is playing out across Asia. Markets are down, but I must say that markets have slightly, just that ever so slightly recovered. The cuts are between 1% to as much as 3% across the Nikkei, for instance. That's the market that's falling the most. Nikkei is still down about 3%. The South Korean market is down about 1% right now. And Hong Kong is also lower by about 1.5%. Mainland Chinese equities relatively better off. Very, very flat on the Shanghai Composite, must say that. And China, like I said, has just been issuing the statement saying that we will, we propose, an immediate resolution and proposing that the U.S. immediately cancels reciprocal tariff. Otherwise, China will take, and I quote, resolute countermeasures. So let's see. The rhetoric and the back-channel parlays, all of that has begun. Very quickly, let's pull up the table for Asia. Where do those tariffs stand? China is at 54%, the highest. We come in at 26%. South Korea is at 25%. Look at the others. Vietnam, one of the major manufacturing hubs in the region, 46%. Thailand, 36%. Bangladesh, massive for textiles and one of our biggest competitors in textile and apparel exports, 37%. Likewise for Sri Lanka, major player in apparel exports, 44%. And there's Indonesia, Malaysia, Australia, the least, at 10%. By the way, the Australian Prime Minister also came out with the comments saying Trump's decision is not the act of a friend. South Korea has responded by taking emergency measures. Their Commerce Ministry has gotten into a huddle, and they're saying we are going to start negotiations very, very soon to pressurize the U.S. to lower tariffs. A lot of the automaker shares, by the way, across the region are down. Nothing new for them, but it's just that 25% auto tariff that gets implemented from today. So your Kia, Hyundai, Nissan, Honda, Mitsubishi, all these shares are down between 1% and 4.5%. Now, the silver lining for India, want to be a little hopeful as well this morning, is that A, we're not alone in this. B, if you heard a lot of the companies, talk to us through the week, companies were saying that everybody will get hit. So relatively speaking, if our competitors, exporting competitors get hit more, for instance, China, for instance, the markets in the textile trade like Bangladesh, Vietnam, then can some of the Indian manufacturers hope to benefit? Let's see. That's the silver lining. And last but definitely not the least, the fact that pharma, at least for now, has been left exempt. So maybe it's a small breather, but one that we want to hold on to. Very quickly, beyond the tariff headline, just because there's a lot of domestic news flow as well, I just want to leave this on the radar. Dabur, the fund flow picture, fund flows are on your screen. 1,500 crores of selling yesterday, which was lower than the last 2 days. But let's see how these numbers evolve. Dabur is a bigger story domestically. Dabur's fourth quarter update is again very, very bleak, very similar to the third quarter update. There's been no pickup in the fourth quarter. Dabur, in fact, is saying that their consolidated revenue will be flat and the India FMCG business will decline in mid-single digits. And the margin is going to be falling by about 150 to 175 basis points. That's a stinging statement coming in from Dabur. They're saying there's no pickup in demand and the general trade continues to be under pressure. So aside of all the tariff talk, this is one stock, domestic facing, but yet we need to, watch carefully.
Well, I recall when Trump won the elections, right? What was the talk? He's going to be good for equity markets. He's going to be good for the cryptocurrency. You want to revisit that? Liberation Day or Liquidation Day? Just take a look at the cryptocurrency market. It's lost $200 billion in the last 3 to around 4 hours. And even the stock futures in the United States, well, they are sharply lower. So this Liberation Day has turned into Liquidation Day, particularly for the US markets out there. On India, the silver lining is that India, well, the tariffs are relatively low if you compare it with some of those peers like Surbi mentioned, Bangladesh, Pakistan, as well as China. Morgan Stanley note, well, they have highlighted maybe there is some scope for negotiation as well. And that's the hope out there. One positive, though, is that part of the uncertainty is out of the way. Because the markets don't like uncertainty. At least you've heard what the man has to say. And from here on, the hope is maybe, in fact, there will be better times to come. Maybe there'll be some kind of renegotiation. Maybe it doesn't go the whole haul. That is the hope out there. What about the FIs? How are they positioned? They're net short, close to around 68% of their positions are on the short side. In the last few trading sessions, they added some shorts. So overnight, well, it was pretty much more or less flattish. And the clients, as well as the FIs, they are on opposite ends of the spectrum. Mildly so. We have been making this point at the start of the series as well, that the open interest is relatively low if you compare it with the previous series. The important levels you need to track. As the GIFT Nifty is suggesting, we pull back by around 300 points or thereabouts. That would mean that we're going to be starting closer to around the 20 DMA. By the end of today, I want to see that 20 DMA getting defended. If that 20 DMA is defended, it still gives you hope that we could see a bit of a pullback from here on, though keep in mind, global equities are likely to be in a bit of a flux. The range that you're looking at in terms of support, the 22,800 odd level, you don't want that level to break. The Nifty Bank, extremely important player for today because, you're talking about tariffs. You'll want someone to come in there and bat for the bulls. It could possibly be the Nifty Bank. You have the April 1st low, that's a couple of sessions ago, 50,750, that level shouldn't break. The 200 EMA as well is the level that you'll want to conquer on a closing basis. Keep in mind, today the volatility will only pick up because for the Nifty, it plays out the weekly expiry. The sector of the day is clearly going to be the Pharma Index. In fact, if you look at the yesterday's intraday chart on the Pharma Index itself, it ended at the high point of the day. But today, you very well have a big gap up opening on the pharma stocks because some of them have underperformed, and stocks like Oro, Dr. Reddy's, as well as Zydus, all of them, well, they have a fair bit of exposure to the US market. So by the end of today, you'll want India, to recover from the first hour's lows. And let's see how that plays out. The FI sell number is going to be most crucial by the end of today.
Absolutely. And I think it's a long day and we're just getting started in that sense. Points taken, Nigel.